Hey guys, Taylor with GammaEdge here. Welcome back to another education piece. Today we're going to be talking about our 100% mechanical trading strategy called P-Trans plus GAX, which is significantly outperforms the SPY SPX on multiple time frames. P-Trans plus GAX, those are two key levels we use at GammaEdge based off the options market data and structure of the market and how speculators are positioned. So we're going to get exactly into all of that good stuff. So getting straight to it, have you ever had a stock, the setup looked perfect on paper, clean technical setup, solid fundamentals, everything aligned, only to watch it immediately move against you the moment you entered? Or maybe on the flip side, something even equally frustrating, a great opportunity, hesitated to take the entry, and then it just ripped. If you're not in long, you're definitely not alone. Most traders struggle with the same fundamental challenges, emotional driven decisions that sabotage otherwise sound analysis. Fear of being wrong, the greed to maximize every move, the paralysis of having too many variables to consider. These psychological hurdles often matter more than your technical skills or market knowledge. But what if there is a way where you could remove emotions altogether? Not only that, but a way of identifying high probability setups, entry and exit at predetermined levels, and letting the market's own structural forces work in your favor, all without having to, second guess yourself or fight your instincts. This is exactly what our P-Transit plus GAX mechanical trading strategy delivers. And just for some quick statistics for you, over the past 12 years, this systematic approach has generated over a 1,300% total return compared to SPY's 400% return. That's nearly a 3.4x over simply buying and holding the market. And this strategy is very simple to implement. This isn't about chasing hot stocks or timing perfect entries. It's about understanding how options market structure creates predictable price movements and positioning yourself to benefit from those patterns consistently trade after trade. In fact, we've curated a list of large cap quality stocks driven by options market, which we include in our universe of selectable stocks for this strategy. This is called the GammaEdge liquidity list. So think Apple, Tesla, Microsoft, Meta. There's no little crappy meme stocks, right? It's these high quality names. So in this lesson, you're going to discover the complete back-tested performance across multiple market cycles, the surprisingly simple entry and exit rules, how to implement this strategy in just minutes each day, why removing discretion actually improves performance, and how our live portfolio has validated the back testing in real time. So right, just getting to it, showing you this cumulative performance again. Here's the 1,300% versus the 400%. And now let's get to the specific back testing results. And so, but before diving into how the strategy works, let's address the elephant in the room, right? Like, does the strategy actually deliver on what we're claiming? Short answer is yes. And the numbers are equally impressive when you see the strategy broken down across multiple different market environments. And just quick before we get going, special shout out to our partner at EdgeRater, very sophisticated system that allows us to upload our data and perform this back testing. Before we get going any further, yes, we have back testing over multiple periods, but we also have forward testing live since July of 2023 that validate these back testing results that we will get to at the bottom, and you'll be able to have access to all those trades. Right, so here, the first back testing is a 12-year track record from Jan of 2013 to May of 2025, Jan of 13, because that's when our data starts, but there's plenty of market cycles in between those two periods. Right, same total returns. We've already hit on this multiple times now. 76% win rate, almost 1,800 trades. Average trade win was $800, and drawdown of 29% versus SPY of 33%. So the TLDR of this is you experience less downside risk by generating nearly 10x the absolute returns. This consistently outperformed through the 2015 taper tantrum, 2018 correction, 2020 COVID crash, and 2022 bear market. And if you guys want to, you guys can stop and pause the YouTube video. You can look at all these stats. This is the SPY here. This is the P-Transit plus GAX strategy here. And then the equity curves down here, which just shows the significant outperformance. Next time period is June 2020 to May of 2025. So 5-year period there. Again, our strategy almost more than doubled the performance of the SPY. Right, and again, this is through different market regimes. right? And what's compelling here is how our strategy maintains its edge through dramatically different market regimes. 2021, everything bubbled into 2022 bear market, and then the recent AI rally, right? And again, feel free to review this in depth. It kind of has all your standard ratios that people look at to measure the quality of systems. And then here we have the equity curves again for the two systems. And then lastly, we just have a year to date, May 25, right? And so here we're looking at P trends plus GEX 11% with a 11% drawdown, and SPY is up less than 1% with a 19% drawdown. So, if you're just buy and hold investor, you could have endured, 19% drawdown while basically breaking even. Or, our strategy has captured you'd be up 11% through the end of May with half the downside risk. And just quickly hitting on the stats of our strategy, 83% win rate over 48 trades. You can see the annualized return, almost 27%, Sharpe ratio 1.25. So very impressive strategy. Again, if you want to look at the stats, feel free to pause the video, check those out. All good. Here's the equity curve of those as well. Right, and something I hit on earlier, but wait, isn't this just back testing? Yes, but since June of 23, we've been running this portfolio live in our Discord community, posting every entry and exit signal, no cherry picking, no hindsight adjustments, no theoretical performance. And the thing to note is that the forward testing has matched the back testing. Every trade is documented publicly, tracked in a shared Excel spreadsheet, and discussed openly with our community. You can see exactly how the strategy performs where real money's on the line, complete with the occasional losing trade. Yeah, believe it or not, we post losing trades and drawdown periods. Right, and this isn't just a hypothetical system, it's a strategy that we ourselves share transparently with the community. And the strategy works because it's based off structural forces in the options market that create predictable price movements. When those forces align with our entry criteria, we participate. When they don't, we wait. Simple, systematic, profitable. Bottom line, if you would have invested in January of 2013 with 100 grand, it'd be worth 1.45 million today using the strategy, and really only $500,000 using SPY. And then we will put this link in the description, or if you're reading the newsletter, we're going to have the link live in there as well. And then here is our output from, this is from 5/22/2025. Again, first trade was at the beginning of July. Sorry, I know we said we started at June, July. It was July. Here, we've taken 290 trades, 71% win rate, positive expectancy overall on those trades. So yeah, it's performing exactly how we wanted to. And just looking at the duration, the average winning trade, a little over a month, average losing trade, a little over 2 months. So now let's get into the strategy background on the core concept of it. Now that you have an understanding of its performances, we need to show you about how easy it is to implement this. So the strategy utilizes two of the key levels that we've developed at GammaEdge that's derived straight from the options market structure, right? We're not making anything up, no complex algorithm. We're literally just looking at speculation and identifying our key levels from there. So P-trans, this is the first level. This is our entry point. This is where call speculators start to take control of the option structure. So once that happens, we generally see a bullish foundation, and this is where we start to see we expect to see an acceleration higher in spot price up to what is called plus GEX or PGEX, which this is the highest concentration of call gamma in a particular strike in the structure, which is our profit target. Because when a strike, the largest strike with the most amount of call gamma, this is the largest positioning on a short-term basis. So this is kind of a natural monetization point if we're able to get up to that point. So that's why it makes sense for it to be a profit target. And in a strong stock, what we expect is when we take the entry, ideally we want P-trans to keep moving higher and higher and higher as speculators are committing capital higher and higher and higher. That's where you get those runners. But if not, then we hit the plus GEX target. It takes us out of the trade, especially in stocks where we're not seeing that continued speculation higher. So that's kind of a great built-in feature of the strategy. The core insight of the strategy is that in today's markets, options often drive stock price. When traders buy calls at the current stock price, market makers hedge by buying stock. As price rises towards those strikes, hedging pressure intensifies, creating a feedback loop that accelerates price movements. That's just what I hit on earlier. Our strategy identifies where those structural setups are in place and positions us to benefit from the resulting acceleration and feedback loop. So again, just hitting on the importance of these levels, P-trans was constructed to identify the threshold where the market structure is dominated by calls. This implies that at this strike and all prices above, the market expects that price to continue to rise. As price ascends higher, dealers face increasing directional risk from their short calls, i.e. traders are long out-of-the-money calls, compelling them to hedge by buying more shares. This action further drives price up, and our strategy aims to capitalize on this dealer-induced buying pressure, exploiting the market dynamics for potential upside gains. And this doesn't even hit on the fact, too, that when price is rapidly moving higher, we get FOMO from the retail traders as well, piling into more out-of-the-money calls, which just intensifies that feedback loop that we just discussed. Right, and then plus GAX is the natural upside target for this strategy, as this is the most convex call strike in the complex. In layman's terms, we see the most short-term speculation at this strike. Once this level is reached, those call speculators have seen a significant appreciation in their options contracts, right? Because as an example, say spot price is at 80, plus GEX is at 100. So when they put that bet on, they put on $20 of out-of-the-money risk. Once the price goes up to 100, they've captured that full $20, and those contracts are worth significantly more money, so they're going to want to lock in those profits. Right, and again, by convexity, what we mean is that this is the maximum point of convexity. Again, I just repeated myself, but meaning the kind of rate of change of their options contracts. Once the convexity starts to go down, that means that their contract, while the price could be appreciating, their contract value is not moving at an accelerated pace, that it's actually going lower. So in other words, when plus GEX has been reached, the juice has been squeezed from their position. Getting into the rules, right? It's very simple, and everything happens on end-of-day data. So overnight, you're going to know the exact positions that you're going to be entering on market open the following session. So for an entry, the stock needs to start the current session below P-trans and close the current session above P-trans. If that happens, then entry will be on the market open for the next session. Right, and then exit is simply that the stock closes the current session above PGEX. If it closes above PGEX, then on entry at market open on the next day, you're going to be exiting that trade. Our position sizing, we recommend 4 to 7%. Well, it's not a recommendation. That's just what we found to be most successful. In our live portfolio, we use 7% positions. We understand folks are not comfortable putting, that much capital into one single position, but again, that's what the backtesting is. And if you deviate from the backtesting, then you should not expect to replicate those stats. And again, just a disclaimer, past performance is not guaranteed future success, all that good stuff. Ultimately you're responsible for entering and exit trades. But again, this is a very good strategy as opposed to just buying and holding SPY, right? And then stop loss. There is no stop loss. Why? Because backtesting has shown that stop lossing hurts performance. But, despite the lack of a formal stop loss, there is an exit rule built into the strategy, which we just discussed above, which is, closing above PGEX. When stocks decline rapidly, PGEX is going to also decline as well. So there is a built-in stop loss per se in the strategy. This is not to say that you will not take heat in the strategy, i.e. experience a drawdown, because you will. And we showed through the backtesting, we're very transparent that yes, you could experience a drawdown. However, as with any strategy, you must stay the course and follow the rules. Position sizing is key for this strategy, so pay attention to this as you review the backtesting results. Getting into why mechanical execution matters. Discretion usually hurts performance. When you start second-guessing yourself, this one looks risky, or let me wait for a better entry, you introduce the emotion that this system eliminates. The beauty, did it just close above P-trans after starting below? Yes, okay, enter. Did it close above P-trans? Yes, exit. Everything else is just noise. And then for finding those candidates for P-trans within the Discord community, we have specific proprietary scans that find these candidates for us, right? We have a P-trans plus GEX scan that you can just use in our Discord. It'll produce Let me turn on the annotation. So right here is the command, then it produces these outputs, which these are the tickers. The thing to keep in mind is this uses end of day data. So our data processing generally occurs after 5:45 Eastern Standard Time. So that is the best time to be running it, is sometime at night. But we also automatically post this list into Discord too. So if you don't get a chance to run it, chances are someone else have. So it should be no worries. And we also too communicate this, either pre-market or the night before, what we're doing personally for the entry and exits of the P-trans for that live portfolio we discussed. And then same thing for the exit candidates. We've created another scan. Again, close above peak X, very self-explanatory, and it shows you those tickers that are closing above peak X. And like I said, in the Discord, we have a specific channel, P2P management, where we're posting the official entries and exits for the strategy. So getting into your daily workflow, if you're interested in implementing this strategy, after the market closes, around 6 o'clock after dinner, check the P2P management channel where we post those scan results so you know what the new entries and exits are for the session tomorrow. When the market opens, you execute on those entries. That's it. No intraday monitoring, no second guessing, no emotional trading during market hours. It literally could take you 5 minutes if you're interested in doing this. Yes, I know this is not a super sexy strategy, right? But it works. Why does it work? Because it's based off the mechanics of how modern markets work today. And final thoughts. By now you've seen the performance data and understand the mechanics of the strategy. The question now isn't whether it works, it's whether you're ready to execute it consistently. The system only works if you follow it exactly. That's with anything in life. If you're following a system, you need to follow it to a T. If you deviate, then you should expect to deviate from what the past results have been. By following it exactly right, it's taking every signal, every exit, position size consistently, and trust the process during losing streaks, right? This video is recorded on June 7, 2025. And during the turmoil that we've seen at the beginning of 2025, we certainly incurred a drawdown, but we showed those backtesting results earlier. Let's go up to it real quick. This right here, yeah, we certainly experienced a drawdown, not as much as the SPY, and then we've experienced and participated with that rebound back up. So you just have to trust the process, trust the system. Right, again, our backtesting, 12 years of data taken in basically any kind of market condition other than the Great Depression. So basically all that we do is we execute and we let the probabilities work out in our favor, right? Lastly, the strategy works, tools are ready, track it live in Discord, only variable left is your execution. So with that, we appreciate your time. Hopefully this makes sense. If you have any questions, feel free to discuss in the Discord. We have no problem sending you every trade as part of our backtesting. We're very transparent, let you guys give it a look. If you want to slice the data up, any other cuts, any other specific time periods, we're happy to do that as well. So with that, appreciate your time. Thank you. Bye.